now to talk about how their quarterly performance was and what lies ahead. Mr. Anandh, great to have you today on ET Now. Thank you so much for your time today. I want to first talk about... Right. I want to first talk about your NIMs because they've moderated sequentially, right? Tell me what actually led to this decline, and do you expect the margins to stabilize around the guided 3.7 to 3.75% kind of range?
So we closed the quarter with 3.78 NIM in Q1, and overall for the year we are pretty confident of the numbers of 3.7. We are quite confident. But we might see a 0.05% NIM drop for this quarter. But overall, we are pretty confident of the NIM, what we are committing.
5 bips drop. Does it recover thereafter, Mr. Anandh? Hi, this is Harsha.
Hi.
Does it recover going into maybe Q3 or maybe H2, the margins?
Yeah, that's it. We closed it at 3.78 Q1, and for the year, we are pretty confident of 3.7. That's a number which we are looking at.
Okay. With regard to growth, the 1.5% sequential, and I know I'm not looking at it Y-o-Y, I'm looking at it sequentially, 1.5% sequential. It looks a little soft. I know your guidance is largely, you're largely in around, in fact, you're above your guidance, but the sequential number looks a bit soft. Could you kind of give us a perspective on that number?
I think we are pretty growing steadily every quarter. If you see March 24, we closed the financial year at 1 lakh crore. Today, as we speak, we are at 1,46,000 crores when we closed Q1. So if you see in a year, we are growing at around 90-odd%, and Q1, if you see, we are around 4%. Probably for the first quarter, we are soft. We are at 1.5%, and we are pretty confident of our growth, what we are guiding in.
Good to hear that. What about competitive intensity, though, Mr. Anandh? How has that been shaping up? Do you expect deposit costs to ease over the coming quarters?
Yeah, we expect deposits to ease because the FCNR has made a good easing of liquidity. And if you see today, we are also grown by 21%. And predominantly, if you see, CUB is 50% of the deposits or retail granular, which is less than 3 crores. And we have not seen much stress on the deposit front as of now, as we speak. Even our, just to give you addition, even our average CASA, which is a main tracker for us in deposits, have grown by 22%. And we expect it to grow steadily in the same way.
And what initiatives are you taking to grow that? I know that loan to deposit is not a concern for you, but you're still doing strong deposit growth. Give us the rationale in an environment like this, and what are you doing differently?
I think our 1,000 distribution center, 1,000 branches are playing a vital role here. The branches, the service, the customer interaction, predominantly we are just sticking on to the basics. We have not tried anything new. Just stick on to the basics and ensure that we service the retail customers properly, and you are there. That's the focus area. And we haven't moved away from the basics of banking, for sure.
And how is the book behaving from an asset quality standpoint? I mean, there's stability, but talk to us about your conversations with customers and what feedback you're getting from the ground. Any concerns at all that one should be worried about?
Honestly, as of today, even with the data and with the customer meetings, we have not seen much stress on the asset quality. As we speak today, first I'll confirm, I'll speak the data before we go to the customer interaction. Today our SMA 012 is at the lowest. Yesterday I did mention this in the call. And for the second consecutive quarter, our SMA 2 is less than 1%. So looks like we should be able to maintain this, number one. Number two, when we meet the customers are also pretty confident. I think the ECGLS has come at the right time for customers. I think the stretched working capital, because of some crisis, have helped them really. So we don't see much asset stretch quality as we speak today.
And I also, Mr. Anandh, want to talk about what's happening with gold loans as a segment. You know, while it's been a healthy one for you, I understand that. But the bigger point really is how sensitive is your book to any sharp correction or volatility in gold prices?
So Two things. One, gold loans, again, we distributed through branches, 1,000 branches. Out of the 250, 300 branches is from semi-urban and rural. So when the branches distributes, when they meet the customer walks in, I think we are pretty confident of what we are doing as such in the transaction. In terms of LTV, you would have seen our investor presentation yesterday. Even at a 20% drop of the gold, we are currently at 63, 64% LTV as we speak as of today, basis the price. Even at 20% drop, we have not seen much stretch. So predominantly in gold loans, we have agri gold loan and non-agri. Agri is something we are really focusing, where it goes to the end farmers for the harvesting and taking the finished product to mandi. That's how my semi-urban and rural branches are literally serving the customers. In terms of non-agri, it's a easy way to raise the fund within a day or so, and it is highly liquid, so they can also foreclose whenever they need. That's how the agri jewel loan and non-agri jewel loan. Considering that our LTV is 63, 64% with 20% drop, we don't have an issue on branch being in distribution center. We are quite comfortable with the workflow, what we have done in terms of loan against gold.
And just give us with regard to, is there a specific segment that you're trying to grow faster than your 2 to 3% above industry growth guidance? Will certain segments grow faster than that? And if so, which would those be, and what's the risk over there?
So we normally, from the risk perspective, have capped the industry cap. So if I want to move away from the industry cap, then I need to go to the committee for this. While this is good, I think textiles is something which we are very gung-ho, and automobile is also doing good. Textiles, we are a pretty decent player in Tamil Nadu for textiles, and with this FTA agreement from Europe, I think there is considerably a decent demand which has come on textiles when we met the customers. So our focus will continue on textiles, yarn, paper industry, pharma, and automobiles. I think we are quite gung-ho about this industry as we speak, and the demand is also quite lucrative in this space.
Right, and is a Capex cycle underway, especially where textiles is concerned? Because you've signed the country has signed so many FTAs and the like. What are you seeing on ground from a textile standpoint?
Yeah, you're absolutely right. So when I speak, even from my own bank perspective, my 30% of my book is in TL, 70% is OD. The 30% predominantly goes for purchase of machinery, upgradation of machinery, and replacement of machinery, new purchase of new machinery. This is how it happens. So when people are really looking forward for the demand, what is going to come with these agreements in place, I think my view is Capex will go up in this segment.
Good. Okay, Mr. Anandh, great speaking with you today, and thank you for your time today on ET Now.
Thanks a lot. Thanks a lot for taking us. Good day.
Okay, that's the word coming in from City Union Bank. The markets are holding out in ship shape. Tell you what, let's take a very quick break. We'll continue chatting with some more managements on the other side.